Hey, hello investors and future investors. Welcome back to the channel. In today's video, I'm going to show you how to roll leaps option. I will show you the why, the when, and the how of rolling leaps option. This is going to be a step-by-step process of rolling leaps option and what it means. And by the end of this video, you should be able to execute rolling leaps option like a pro. So, welcome to Investment Gains. Let's roll right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I utilize my portfolio in order to make consistent income. For today's video, we're going to be going into LEAPS option. Now, right before we do that, here's a quick refresher. LEAPS is an acronym that stands for Long Term Equity Anticipation Securities. These are usually long dated options with expirations a year or more into the future. Remember that the operative words is typically a year or more. Now, investors and traders like myself use LEAPS option in order to get exposure into stocks with much lower capital than actually buying the stocks outright. So this strategy is going to be perfect if you're trading with a small account. But here's the question. What happens when your LEAP options are approaching expiration? Or you want to lock in profits but still want to maintain that LEAPS position? Or the stock moves significantly and you need to adjust your strike price? Well, we're going to get into that right now. So, on this channel, we like to get down and dirty with options, meaning we actually do the option strategies and we show you how we do it for two main reasons. One is that you can learn how to do it, and the most important reason is that you could go ahead and practice these option strategies with your portfolio if you so choose to. So, for today's video, we're going to be using Micron Technologies, one of my favorite stocks right now. So, as you can see here, I'm on a Micron Leaps option. But how do you know this is a Leaps option? So, really quickly, if you have been trading options, you could simply just look to right here. It says sell to close, and I'm going to receive a lot of money if I will to close this trade. So, that's just an indicator. But let's scroll down and I'm going to show you the real deal and walk you through it. The most important factor that makes this ellipse option is going to be my expiration date down here. As you can see, the expiration date is going to be the 19th of September 2025. My average cost down here is $28.65. And currently, the stock is trading at $29.53, which says I'm up a couple $100. Now, also down here, you could see I only have one contract. Now, what would happen if I were to roll this leaps option? Well, there's a couple of ways to do it. I will show you the Robinhood way, which is the extremely easy way to do it. But in order for you to do the Robinhood way, you must first know how to trade options. So let's do that way first. I'm going to show you the other way where everyone should actually learn this way. So you guys know how Robinhood likes to do it. They like to make everything extremely simple. So we simply scroll down and we go to roll this option. What that does is that it automatically opens up the option chain and it selects the next best strike price that it thinks you should roll towards. Also, what it does is that it gives you a trade that closes out your current position. So Robinhood automatically selects your leaps option. Now all you have to do is go ahead and pick your new position. That's why I said you still need to know how to trade options in order for you to know what to pick. So let's go ahead and we're gonna go back and we're gonna do it the real way so everyone could learn. So first of all, we're gonna first go look for our current position, and to do that, we're gonna go to view all options. Once the option chain is open, now we're going to have to do the opposite in order to find our option. Now, this is a leaps option. So to get into the strategy, I had to buy a call. Now, in order for me to find it and close it out, I have to do the opposite of buying a call, which is going to be selling a call. So I'm going to jump over to sell and call, and now I have to find my expiration date. As you guys saw, the expiration date was September 19th, 2025. Here we go right here. And then now I'm going to go below my share price in order to find my strike price. The reason why my strike price is below the share price is every single video I put out here, I always show you guys my recommendation is to always try to get your strike price below the current share price because that maximizes the use of most of these option strategies. Now that we've found our current leaps option, we're going to go ahead and we're going to select it. And what that's going to trigger the first leg, which is going to be the closing leg. So if I were to close this leaps option right now, I would be receiving a credit of $29.40. Now, what I'm going to do is that I'm going to roll this closed position. So remember, rolling a leaps option simply means to close your current position and open another position simultaneously. So now I'm going to be closing this. Now I have to go ahead and select my new position. So I'm going to roll out and I'm going to roll up. To roll out simply means to choose a strike date further out than your current strike date. Now, to roll up simply means to choose a strike price higher than your current strike price. Now, as you can see, our strike price was $80. So what I'm going to do now is I'm going to choose a strike price higher than the $80 strike price. Do not forget, you need to go back now and buy another leaps option. So we're going to get it at the $90 strike price. I'm going to go ahead and I'm going to select that. So this is how, if I need to roll this right now, this is how I'm going to do it. So first of all, I'm going to close my current position and I'm going to open up a new position. What this is going to do is that this is going to give me an additional credit of $2.60, or in real life, this is going to be $260. Each option contract is multiplied by 100 shares. And that's how we roll out and we roll up. If you guys are getting any value right now, now is the perfect opportunity for you to guys go ahead, like the video, subscribe to the channel, and most importantly, hit that notification bell to always get an alert when I release a new video. Now that we're done with rolling out and rolling up, I'm going to show you how to roll out and roll down. So let's go ahead. We're going to get out of this. Now, to roll out and roll down. To roll out just simply means to choose your strike date further out than your current strike date, and we already have that selected. Now, to roll down just means to select another strike price below your current strike price. So our strike price once again was the $80 strike price, and I'm going to be going with the $75 strike price. I'm going to go ahead and select that. So there you have it. Now I have rolled out and I have rolled down. Now to roll out and roll down, in this instance, I'm going to have to pay. Now, the amount I'm going to have to pay is $6.95 or $695. Now, I know what you're asking yourself. Why would anyone want to roll out and roll down? Well, it depends on where you are with the trade. It depends on whether you're up on a trade, you're down a trade, whether you change from bullish to bearish. There's several different reasons that's going to make you actually want to do this. Now, remember this price right here, which is $6.80. It will come in handy when I'm going to show you how to roll back and roll down. So 680. Okay, so now we've been through how to roll leaps option, to roll out and roll up, and then again to roll out and then roll down. Now I'm going to show you what you don't see on YouTube, which is to roll back and roll up and down. That still has its benefits as well. So now to roll back simply means to choose a strike date which is going to be closer than your original strike date. The original strike date was September 19th, 2025. So I'm simply going to go to July 18th, 2025. Now remember, at the beginning of this video, I said that a leaps option is typically a year or below. If you do choose a long call or a leaps option that's going to be 6 or 7 months away, this is still going to be considered a leaps option, and you're still going to be able to do other strategies such as the PMCC, which is the poor man's covered call. Again, this is another brilliant strategy to get involved with if you're trading with a small account. I will try to link a video to the top. Okay, so now that we roll back, we're going to roll up. So this first one is going to be rolling back and rolling up. So once again, remember, to roll up means to choose your strike price above your current share price. So we're going to choose our price above the $80 price right here. And once again, why not go with the $9 strike price? So we're going to go ahead, we're going to select that one. And there you have it. Now, as you can see here, our previous roll out and roll up, we only got $260. Now to roll back and roll up, we're getting about $500 more. So that is one reason why anyone would want to roll back in order to get even more income. Now, that is pretty straightforward. And again, there's several different reasons why someone is going to roll back their options. So now we're going to go ahead and I'm going to show you how to roll back and roll down. Once again, to roll down simply means to choose a strike price below the current share price. And why not choose the exact same strike price of the $75 right here? So we're going to go ahead and we're going to select that one. So there you have it. If I were to roll back this leaps option and to roll it down, now I'm going to have to pay $2.50. Now, I did ask you guys to remember the last price. As you can see here, if you were to roll back and roll down, you're going to be paying way less. So there's different reasons why you'd want to roll an options position. Here's my professional advice. Always takes what the market gives you and roll your leaps option based on what the market gives you and what you want to achieve. This is not a black and white, neither is it set in stone. So here's the question. Why would you want to roll a leaps option instead of just closing out a trade? Well, there are a few reasons. One reason would be to extend the time of your leaps, like I just showed you. If the trade is going against you, you could simply roll out, extend the time. It's going to give you more time to do whatever strategy that you want to do. Another reason would be to adjust your strike prices. If you think your $80 strike price is not going to be enough, you could always roll out, roll down, go to the $75 strike price. The other reason you might want to roll a leaps option as opposed to closing the option in its entirety is to manage your risk. And lastly, in order to lock in gains, as I showed you at the start of the video, if I were to close this right now, I would be making about $200. So I could close this leaps option right now in order for me to lock in my gains. Now, it would be remiss of me if I don't give you a heads up on what to look out for before rolling your leaps option. So here are a few things to look out for. Look out at the premium you're going to be receiving or the premium you're going to have to be paying. Make sure it makes sense to you before you decide to roll your leaps option. The next thing you got to do is look out for the tax implication. Now, whenever you close a position, that triggers a tax event. So you're going to be taxed on that. So always make sure you keep that in mind before deciding whether you want to roll a leaps option or not. The other reason why you have to look out for is the implied volatility of the stock. Now, your IV or your implied volatility affects your option pricing. If the IV is high, rolling to a later dated option might be more expensive. So be careful and also keep that in mind. So now that we've been through the why, the how, and the when you should roll options, here's what I'd like to leave with you. Rolling leaps option is a powerful option strategy to stay in control of your investments, adapt to market changing, and maximize your potential profit. Just remember, always have a clear plan and stick to your risk management. And always do your own due diligence before entering any trade. Now, if you found this video helpful, remember, hit the like button, subscribe to the channel, but most importantly, if there's anyone out there you think that can benefit from this content, feel free to share it with them. What do you guys think about leaps? Have you done it before? Drop your thoughts and questions in the comments below. I do respond to all my comments. And until the next video, keep rolling your investments.